Clover Health stock has been facing significant pressure. Year to date, it's down about 19%, and just recently, in this past week, it's down over 22%. Currently now back down to $2.43. In the past month, it broke $3, but now we are currently back pretty much at all-time lows, $2.53, a $1.3 billion valuation for Clover Health. It is now selling at the same prices it was selling at back a couple months ago when some insiders were repurchasing some of the stocks, ranging from $2.17 to $2.50. This insider purchase caused the stock to jump up over $3, but now we are back to the same levels that they were buying it at. It's stuck. We're pretty much stuck. It's been stuck at these levels since like 2022. So anyways, what's going on? Why has this stock dropped in the past week? Well, the primary driver behind Clover Health's struggles currently is because of the rising medical costs in 2025. So employer-sponsored health plans are projected to be increased by 5.8% to 9% annually. And some of the main reasons why medical costs are rising is because high cost of drugs, market concentration in the insurance industry, and increased demand for new therapies. But it's an industry-wide surge in medical costs, and it's affecting all Medicare Advantage insurers. The company has also stated in the Q2 2025 earnings transcript that their insurance BER has increased to 88.5%, and they're actually going to increase it even more in the next couple quarters. So the higher the BER, it indicates that medical expenses consumed a larger portion of that premium revenue. This trend reflects a broader challenge all across the Medicare sector. We're going to go ahead and jump to the quarterly transcript real quick. Again, on the latest column right here, this is Q2 of 2025. This is the latest earnings report that Clover Health just released. I mean, right off the bat, you could see earnings per share down 200% year over year. And the main reason for that is because of the medical cost inflation currently happening in the Medicare sector. It's overwhelming revenue growth. They did have 2 consecutive quarters of double-digit total revenue growth, up over 30% year over year, but it is affecting their earnings per share. But again, the primary culprit is the company's soaring medical costs. The most significant driver of negative earnings per share is the increase of their insurance BER. Again, this is the benefits expense ratio. The higher it is, the worse it is. It's currently at 88.5% versus last year's number, which was at 76.1%. Again, this means that for every dollar of premium revenue collected, Clover is now paying 88.5 cents in medical claims versus 76.1 from a year ago. The company's cost of revenue has skyrocketed while their total revenue is only up 34% year over year. Go down to the cash flow over here. It's all over the place. Latest free cash flow per share posting 0.01 versus positive 0.09. That is down 88%. So 2 consecutive quarters of negative year over year declines on the free cash flow per share and cash flow from operations. So this isn't good. Investors do not like that. Lastly, when you go down to net income, posting negative 10 million versus positive 7.4 million from a year ago, that is down over 243%. They had 6 consecutive quarters of net income growth, but Q2 was pretty bad for Clover Health, and it's reflecting in the stock price. Let's go ahead and check out some other stuff. Whoa. Well, looks like institutions are in. So this is why you shouldn't freak out too much, because institutions are jumping in. Institutional ownership for Clover Health is sitting at an all-time high, while the stock keeps on coming down. Remember, we also have insiders purchasing these shares a couple months ago. This shows confidence that the insiders know what they're doing. They think the stock is undervalued. They also have some share buybacks happening. Remember, guys, Clover Health is going to be fine. If you go to the transcript real quick again, we ended the second quarter with cash and cash equivalents and investments totaling $389 million. They expect that the cash balances will remain strong for the remainder of 2025. The membership has also been increasing. It was up 32% year over year, and they expect membership to grow for the rest of the year. Ignore the volatility in the stock price right now. Insiders are buying, institutions are buying, and membership is growing. All of the main KPIs that aren't really talked about on the earnings call and that we should be watching as investors are improving year over year, but the stock price keeps on going down. And so, not financial advice, but in my opinion, I think 2026 will be a good year for Clover Health. The business has been improving slowly, and at these levels, the price seems pretty cheap. $1.3 billion valuation, $2.53, the same prices the insiders are buying. Anyways, let me know what you guys think. Thanks for watching this short video. Don't forget to like, subscribe, and we'll see you in the next one. Peace.